Japan really leading the losses right now. That is down around 280 points.
The resistance comes in at the 40-day exponential moving average, which is at about 43,880.
We are very optimistic about the second half as well.
The Nifty itself is down about 40 points, absolutely in sync with what the pre-open was indicating.
Market will grind upwards. Okay, it will be flat to grinding upwards.
One of the reasons for the depression in the NIMs is also the NPLs.
In the pharmacy space, we added over 1,000 pharmacies last year and 90 this quarter.
We need to worry about is how quickly the global issues get sorted out.
I saw the first hint of green.
On the bank.
On the bank Nifty. There you go. There's the green on the bank Nifty.
Company will not have to make any payment to TCS for software maintenance in the first year.
And the EBITDA too has come in at around 4,398 odd crores, which is much higher than what we were anticipating.
Started on the back foot, but there has been a substantial recovery from the lows that we are seeing.
Well, if we've not said it before, here's wishing all of you, your families, a very happy Dhanteras and happy Diwali from all of us here on the Closing Bell team, and of course from CNBC-TV18 as well. You're with us here in the last hour of trade today, and of course for the week as well. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi. Good afternoon.
Good afternoon. Good afternoon, guys.
I can see it.
You can see what?
The weekend.
Why are you so excited? It's a working weekend, may I remind you?
And the 60 minutes also I can see.
But it's a festive working weekend.
It's been an intense, earnings season. We're drawing the curtains down on that. You have Diwali, you have weekend. Let's pull through these 60 minutes and head off into the weekend.
Absolutely. Well, I think if looking at the screen...
So head off into the weekend. Come back.
Okay, well, as far as the market's concerned, there's not too much to report, at least at the index level, and it's been like that throughout the session. We've been flip-flopping around that flat line, a little bit of green, a little bit of red, and Prashant, even as we speak, I mean, Nifty is 20 points lower. Mid-caps are better. Mid-caps have had a good recovery. That's
relatively speaking, Surabhi, you look at the rest of the globe, we're doing better, far better than everything else. I mean, Asia was all down. You look at what Europe is doing, it's down 0.5%, 0.75%. And here, actually, there is some green on the screen as well, and occasionally there is some red, but it's flat. That's Asia, Europe right now. Actually, even look at US futures, etc. So on a day-on-day basis, I mean, there is clear outperformance which is coming through. Now, the Nifty is trading around the 20-day moving average, which is, I think, about 15 odd points. Where actually, we are, I think, at the 20-day right now. When we, as of yesterday's close, that number is 19,373. We're at 19,370. So at the 20-day, hopefully we'll kind of eke out a small gain on top of that. By close, Bank Nifty, the levels have not changed. Again, absolutely flat so far. And we put out that 40-day exponential, which is 43,880. That's the immediate resistance. But you can't really take away very much with the kind of day we've had so far. No real signals, price or otherwise. The big global cue, of course, the next one is the CPI. We had kind of stopped talking about data and everything, but there's always somebody or the other who comes up and shows up and says that, well, inflation is still a problem, and it was Fed chair himself last night who said it. So I think a lot of the market is once again focused on data. What else? The US data. But that is only next week on Thursday. Otherwise, it's a bit of a clean run. 80% of S&P companies have reported numbers. Our earnings season is pretty much winding down. So, and of course, but a big trigger here locally is elections. And we won't know, of course, till early next month what the verdict there is going to be. But today, it's absolutely close, but much better than what we'd hoped for in the morning. Surabhi.
Oh, yes, absolutely. Would completely agree with that this is a better looking screen than a lot of others around the world. I'm just looking out for some of the reactions today. The numbers that we've got so far, reactions more negative or muted than positive. M&M would be case in point, and we'll tell you more about those numbers as we go ahead. But, it's not too much, and some of the analysts are already saying on the street that the revenue was a little below expectations, perhaps. So that's the stock, how it's played out. Actually, it's a profit-taking day for autos. Not just M&M, Hero Moto, that's also on the way down, Bajaj Auto. These are stocks that are kind of struggling. The other sort of weekends on the Nifty include an Infosys, a TCS. So these are the other big boys which are on the lower side of the screen. Having said that, the PSUs are doing well. We have NTPC up 1.5%, making it the best performing stock on the Nifty right now. And then there is ONGC. We still have more earnings to go, and we'll get Coal India and a bunch of other numbers as well. So the day is not yet done, but from a trading perspective, I'm with you. 60 minutes is what we're looking at.
Well, that's right. So to put it in cricketing parlance, I know the one-day World Cup is going on, but it's like a test match, right? The first 2 days were very exciting. The Nifty was hitting it out of the park, doing very, very well, standing at that crease. Now it appears it's on day 3, when you want to consolidate a little bit, you want to see which way the game is going to swing, whether you want to go for the win or you want to draw the game as well. And then we'll get into the climax. So let's see how that goes. For the time it appears, some bit of consolidation, a marginal pullback. Stocks are doing a thing of their own, mind you. You have plenty of stocks that are up 4-5%, plenty of stocks as well that are trading in the negative terrain. Let's get in Mitesh Thakkar to help us out with what should the closing strategies be. Hi Mitesh, good afternoon. Well, how do you feel about today? It's been that sort of a range-bound trade, a bit of a negative bias out there. Are you looking to buy, and also give us your trading picks?
Afternoon, Nigel. I think not really. I think it's a market which opened gap down, covered the gap, but then failed to build upon that. So it's still a market which is not going anywhere. And given the fact that you're heading into a festive weekend, I think you might not want to carry a lot of trading headache with you. So we're not looking at. Anyways, there are no signals, and we're not looking at any kind of increasing positions aggressively. But yeah, 1 or 2 stocks here and there, I think will still make sense to possibly trade into. I have one buy and one sell call right now. HCL Tech is something which is broken down. So sell here with a stop at 1265. Look for targets of roughly around 1220 on the downside to begin with. Maybe even better levels can be seen. And the power stocks are doing very well for last few days. NTPC, Power Grid, etc. So Power Grid is something which I recommend buying with a stop at 207 for targets of 220.
Okay, got that. Thanks very much, Mitesh. We'll come back to you for some more trades in a bit. We'll have Prakash Diwan joining us on the show as well today. Before we get to him, Nigel, why don't you just run us through the Hindalco and the performance there? What did you make of the numbers?
Well, for Hindalco, we already have bulk of their numbers in terms of the EBITDA and the profitability, because Novelis's numbers come in there, and that accounts for more than, approximately 70% approximately of their numbers. You have Novelis, the entire entity, and Alaris as well that they had acquired. So to run you through the basic numbers, standalone entity revenue up by close to around 21%. We're looking at, we're looking at the standalone numbers because consolidated includes Novelis. So that's why I just run that through. Margins marginally better, net profit as well as up. But the key numbers you look at for Hindalco when they deliver their India business is the 3 big numbers: aluminium, copper, and you look at the net debt number. Let's start off with aluminium first. You look at the upstream business, it's running at optimum levels. So you don't expect any kind of growth or any kind of big volume fluctuation out there, percent up or percent down. But the number you look at is the upstream EBITDA, that's 2,075 crores. Then you look at the downstream as well. Now that's come off a little bit on a year-on-year basis, but you add both these two. That's the downstream and the upstream together. You get roughly around 2,240 crores. Now that's better than what Kotak was estimating. They were at around 1,800 crores. A couple of other brokerages were at around 1,950 to 2,000 crores. So with this number, you're talking about close to under 10% beat just on the aluminium business. Moving next to the copper business. Well, that's done very, very well. I remember a few quarters ago, they had a couple of shutdowns and TCRC margins weren't great as well. But the copper business has delivered an EBITDA number of 650 crores odd. Kotak was estimating 590 crores. So in that context as well, it's good. So 2 of those numbers go down well. And the net debt number, you don't want it to balloon up. Remember, they have a big, capex plan going ahead. And the net debt number on a sequential basis, well, that's down close to around 2%. So all in all, the 3 numbers that we have, aluminium, copper, net debt number, tick, tick, tick. Novelis as well was a tick earlier this week. So these numbers go down as a good showing. Prakash Diwan joins us to help us out with quick analysis on that. Prakash, the numbers look quite good according to me. What's your take?
Good afternoon, Nigel. So after your thorough analysis, I can just make it quick. That, Hindalco could have, their India standalone numbers could have probably been weaker, given the fact that the demand side and the shipments that we've seen in the last 3 months have not been the best. But I think where the surprise comes in is the upstream EBITDA, as you mentioned rightly, on the aluminium side. So aluminium is filled in. Of course, copper is also a small piece yet. But what looks like is that if the India business is using this as a base, it could kind of only start expanding as we go into the next 2 quarters, which means you have a very good entry point if somebody were to look at least a 12-month horizon for Hindalco. And metals, the cycle is getting shorter by the day. We used to talk about metals about 2-3 years cycles. Now we're talking about 12 to 18 months. So my sense is Hindalco offers you that very good entry level. This is similar to what Ultratech did about 2 quarters back in the cement pack. The largest player gives you that opportunity to get in with softness in the preceding quarter, that could reverse. So very good numbers, and I think Novel is chugging along so well. You can only look forward to a very strong performance from the consolidated entity.
Prakash, I also wanted your view on a far more, complex business, Vedanta. Daring enough to buy it at around 240, plenty of expectations now, and that's reflecting in the stock price. If I pull up, say, the last 1 month chart, you'll see the stock from that 210 low, all the way it's gone to around 240 rupees. So the street is expecting the promoter, Mr. Anil Agarwal, to do something. The last time I spoke to him, he said, Nigel, I'm going to come up with the goods and I'm going to deliver before the end of this year. For the time being, the street is buying into that hope. Would you be buyer at around 240? Valuations are not a problem. The problem is what the promoter entity is going to do with the parent debt.
Absolutely. And I think the problem still remains unresolved of sorts, more from a timing perspective than anything else, not an intent perspective. But, the problem with that is that you really don't know what kind of a trigger the stock is going to see, the story is going to take a twist, because every time it comes up with something, you kind of are taken aback with a surprise element. Here, there is anticipation that they will probably do well as they coincide on the year end, especially the PLC numbers would probably, with December end, would probably be even stronger, given the fact that they are looking at the debt repayment cycle to begin in the first quarter of calendar 24. So it coincides with that. They will have to do something. They don't have the luxury of choice. But do you want to ride on a hope trade? Is the question. I find some of the other names in that same sector, even in the hydrocarbon sector, if you were to take that part which is doing well from Vedanta, they're far better opportunities, Nigel. So I would like some peace of mind and not just necessarily chase a turnaround in the case of Vedanta at this point.
Okay, that is the take on those two metal majors, Vedanta as well as Hindalco. But, it is the festive season and it is the weekend. So let's talk about a different segment. Looking at United Spirits right now, the market is not quite in high spirits looking at the stock, the way the stock is sort of shaping up. In fact, it's been struggling down 5-6% right from the morning after the numbers came in. So we have Surabhi Sutaria, my namesake, joining in to take us through the performance. And I must tell our viewers that this is a little of a bittersweet moment because Surabhi may not be telling us too much about many of these buzzing stocks, at least in the near future. Surabhi.
Thanks so much for that. The numbers for United Spirits were largely good. The outlook is also positive. The gross margins are expanding both on a year-on-year and on a sequential basis. But there are some concerns regarding the demand and the volume uptick going forward. So I have some brokerages view with me. Citi on United Spirits, they have a neutral rating. They have raised the target price to 11.25. They said that the near-term demand trends appear subdued. Also, the management sounded cautious and highlighted early signs of demand slowdown even in the mid prestige segment. They remain positive in the medium term. However, at 55 times FY25 PE, the potential upside according to them is largely priced in. IIFL on United Spirits, they have an ad rating with a target price of 11.90. They say it was a strong quarter with a top line growth of 12%. And management has guided an EBITDA margin which is slightly higher than expectations. But again, valuations for them is sort of a concern. BofA on United Spirits, they have an underperform with a target price of 9.95. They say it was a good 2Q, but the commentary is cautious. And in addition to popular and lower prestige segments, company now called out demand pressures in mid-prestige segment as well and led to moderation in EBITDA margins to 15 to 15.5% level for full year versus 16.7% in H1. So that is what they're worried about. And lastly, I have Equirus. Again, they have a long call with a target price of 12.01. They say that the prestige and above segment was driven by realizations and not volume. So that is a bit of a concern for them.
All right, Surabhi, wishing you all the best as you move on. We'll get Prakash's view on the stock. But, rarely do you come to work and you meet a great analyst and a good friend as well. Thanks so much for all the good times. So, and wishing you all the best in the times to come.
Okay, that's Surabhi with the numbers. Prakash, I was just thinking, I don't know what slowdown United Spirits is talking about. One, look at all the liquor stores around me or the restaurants and the bars. I don't see a slowdown. But anyway, I think that's what kind of spooked the street from the conference call. Your thoughts?
Absolutely. So interestingly, from all the brokerages that should be listed out, look, I just remember the last one, which was closer to 1200 plus as the target. I think it was Equirus or whatever. And I haven't read the report, but what I can tell you is it echoes the feeling that I have about this space. United Spirits has remodeled itself completely. We all know about that, the deleveraging part, the premiumization part. But what people are yet to see is their ability to keep on enriching the premium portfolio in a very significant way. Let me explain this in a very simple way. The moment Indri, which is one of the single malls that recently hit the news, headlines after it won some award, certainly kind of, made people start realizing that there's so many Indian single malls beyond, Amrut and beyond the Paul Johns of the world. Now, actually, United Spirits has a whole portfolio that they can unleash out here, as and when, the opportunity arises. They have the ability to fill those gaps in the prestige and the above segment so easily that I'm not surprised if the volumes have not come, realizations have improved. That's what they've always looked at. So this is a great space to be in. You are the market leader. You will keep on reinventing yourself as you kind of get leaner and stronger. And the PE multiples are the only thing that you need to look at. So from a PEG basis, probably they are available in my estimates at about 32, 33 times, which is livable. So look at that, and I think it'll probably get re-rated as we go along. And as you rightly said, let the December end consumption numbers come through. We'll probably take a look at it again.
Okay. All right, we do have to take a quick break on that note. We'll come back with a lot more on the other side. We'll, of course, look at some more buzzing stocks that are in the news today as well. Welcome back. Here with us on Closing Bell, and we're looking at some more stocks in focus. Now, Honasa Consumer had a very interesting journey today. We should pull up the intraday chart. Let's get the chart up if we can. Fell very sharply in the morning, then an equally, baffling, stunning recovery. Maybe not baffling. Now we know why, because Mangalam was telling us that Jefferies came out with a note. They've initiated coverage. They have a positive view on the stock. So, Mangalam, fill us in. Tell us more.
Well, rarely do you get an initiating coverage just within 2 days of a company's listing, and that's what happened with Honasa. But then again, it's a high conviction buy that has come in from Jefferies, and they have a target price of, hold your breath, 520 rupees per share. That's a near 72% upside from the current levels that we've seen on the stock. What are the growth drivers according to them? One, diversifying away from Mamaearth and diversifying away from online is something that they're betting on, because nearly a third of their revenues comes in from brands which are not Mamaearth, and a third of their revenues come in from offline stores as well. So diversification of revenue that way, as well as offline expansion, is something that they're betting on. The company has been growing at about 80% on the top line over the last 3 years. Jefferies bakes in a 27% revenue CAGR over the next 3 years. And where do the margins expand to? They expect double-digit margins by FY26 as well. They value the company at 6 times FY25 sales, which they believe is fair given the growth runway and how other peers are trading at as well. And as a result of which, they arrive at the target price of 520 rupees. However, Jefferies has, as a house, been positive on a lot of the new age companies. So we need to keep that in mind as well, and also put on the table a lot of risks that they have. The biggest risk is excessive competition, a lot of them coming in from the large traditional FMCG players. The second one is aggressive M&A, as we've seen in a lot of the new age companies who chase growth. If there is an aggressive M&A, then they'll watch out for that. And finally, the lack of scale in some of the newer brands that Mamaearth is seeding, or Honasa is seeding right now, could be one of the risk factors. But for now, a strong conviction buy with a target price of 520 rupees.
All right, that's Honasa. Prakash, what do you think? What a stock? Thanks, Mangalam, so much for explaining to us what really happened there in Jefferies' hugely bullish stance. Prakash, what do you think? Would you be a buyer?
Not at all, not at all. This whole metric of price to sales, Surabhi, itself, in my understanding, is kind of inadequate to value a company. And remember, retail is getting so fiercely competitive, and we've seen how some of the bigger brands, more established, more well-known and prevalent brands like Nykaa have also had to kind of, very humbly estimate or accept their growth rates. I don't see any reason why they could grow at such cost. You're saying 33% is the piece which is currently other brands and offline sales, and that is likely to grow so much. So what happens to the main area of business? That itself is a bit of a question mark. So I wouldn't pay such top dollar when there's so much available in terms of opportunities. So I have no compulsion to invest into IPOs as well. So that's the advantage I sit on. So I would definitely believe it's a little bit of time that you would have to give it. Watch it for 6 months at least to see whether they really can deliver on all that, and then probably take a call. But I wouldn't get a FOMO if I pass on this one.
Okay, fair enough. That's a pass on Honasa. With that, we'll let you pass into the weekend as well, into all the festivities. Prakash, have a great one. Wish you
thank you so much. Thank you.
A very
Thank
healthy,
you so much.
wealthy and prosperous new Samvat. And we'll see you on the other side in the next 1 or 2 days. All right, with that, let's get you a snippet from one of our Diwali special shows. Here's a snippet from Market Masters. Sonia and Nimesh caught up with the top fund managers Pankaj Tibrewal as well as Hiren Way to discuss some key learnings through their journey so far.
Long-term investing is clearly underrated right now, and longevity. And long-term investing is clearly underrated right now, and longevity. And what I have learned in India, what works is if you can identify right set of promoters, management teams with the right DNA, I think a mediocre business can turn into a gold mine. And our entire effort in trying to pick up stocks is first to identify the right management and promoters. And I think that's something which we have learned, that if you a good business but wrong set of people running it, God save you.
Okay, that's a very, very important thing to learn, especially for the younger generation, right? Where everything is like short format videos and instant gratification and the Instamarts of the world. Long format and longer duration, investing is something that's a virtue, you think?
it's not only it's not about a virtue, but I just think if you really want to make big money, there's no shortcut out.
Absolutely.
Right? I mean, I was just looking at some of the stocks that have done well, both as a personal investment, as you know, many of them are quite common even for clients. And I really figured out that the real big money happens if you hold the stock for at least 10 years.
Yeah.
You know, because that's the kind of time that is required for a stock to mature.
True.
And really that explosive growth to happen, right? Because even in a growth company, it takes time.
Yeah.
And then the markets have to recognize it. And when the growth cycle of a company and a great market cycle coincide is when magic happens.
Yeah.
Okay, well, that's some conversation with the market experts, and we'll continue to, of course, get you more as we go along. Well, 5 or 6 points lower is absolutely flat out there. So let's get the pulse from the dealing rooms. Nimesh, of course, has been busy making phone calls and talking to people to get a sense of what exactly is going on. Nimesh, were you able to speak with a lot of people? Are people still around, or what's going on?
Well, people are still around, Prashant, you know, but again, very range-bound day of trade. The volumes, of course, are on the lower side. But again, the sense I'm getting is that the buys is still positive from the larger FI. So that's been the trend. And we've seen this in the numbers as well. The FI selling intensity has quite lowered in this last 1 week. Again, you know, there is a small market close basket buying at a leading FI desk. So that probably will have an impact in the last 30 minutes of trade is my sense. But in terms of sector, again, the big sector outperformance is in the PSUs. Again, the PSC index is up today, another 1%. And a lot of the top F&O gainers are part of the PSU basket. So that PSU momentum clearly continues. And those are the sectors which are well bid as well from the larger institutions. I guess from a technical perspective, again, 19,450 is acting as a very strong resistance. Even in today's trade, we're difficult to cross that. So broadly, you know, the sense is that the FI intensity, selling intensity has lowered. But I guess from a technical perspective, 19,450 is acting as a very strong resistance.
Okay, all right. Nimesh, you know, Prashant is saying you're making a lot of calls and all. I just saw you in a lovely location you know, when you were doing that interview. But tell us, what are you picking up in terms of individual names?
Well, Nigel, you know, in terms of individual stocks, the first stock on my list is Centum Capital. Stock we don't talk too much about. The stock is quietly up 10% in today's trade. This week, the stock is up nearly 20%. And there is a buzz that maybe you're going to see a big corporate development in that stock very soon. So that's the reason that stock is buzzing off late. The second stock is Gland Pharma. Post numbers, we've seen a big reaction on that stock as well, and it's a sharp up move. But now the sense is that there's going to be a large block coming in Gland Pharma very soon. So that is something to track there. The third stock is Aptus. It was part of my chatter a few days back. The block got done. There was a large block in the pre-open today. I understand it's the seller is a leading domestic fund who sold out. It's a clean out trade, and after that we're seeing an up move in that stock as well. So that's the third one. And the last stock is Precall. For second day running, there is good amount of selling interest from larger institutions. So the delivery volumes are quite high. And in the last 2 days, the stock is corrected nearly 12-13%, and on large volumes because of large selling coming in from a leading FI desk.
Okay. All right, Nimesh, got that. Thank you very much for all the buzz and all the chatter from the dealing rooms as usual. I think we have Mitesh with us now. So let's get some more trades in. Mitesh, final half hour left. What thoughts now? What ideas?
Yeah. I think, on the stock side, I have identified a cash stock, actually, a big breakout happening on the charts of Nesco. It seems like starting a new trend on the upside. So while the stock is up 13.5%, I still, warrant people to take a positional call. Maybe you would want to stagger your buying. So buy part now, buy part around 750. Keep a stop below 725 here and a target of around 840 to about 860 on the upside. Looks very likely. So it's likely a positional kind of an outlook on the stock chart. And on the BTST side is the Steel Authority of India Limited, which I would recommend taking a BTST with a stop below 87 for targets of around 89.5.
Okay, all right, Mitesh, thank you very much for all the trades, all the calls today through this somewhat that's closing out. Wish you a very happy Diwali. Have a great break, and of course, we'll see you very, very soon. On that note, take that break. We'll come back on the other side, and we'll get chatting with the management of Mahindra & Mahindra, talk about the quarter gone by and the outlook ahead. Back with that conversation, Mr. Rajesh Jejurikar would be with us in just a bit.
Welcome back. Well, the markets are trading more or less sideways, but I think for the time being, I think we have some source-based information that's coming in on the insurance pack, and I think that's coming in from Yash. I think we'll get to that in just a bit. We have the management of Mahindra & Mahindra who's joining in right now to help us out with the numbers that just came out a very short while. We have Mr. Jejurkar who joins us on the show. Hi, sir. First of all, happy Dhanteras, and wishing you, your entire team, a very happy Diwali as well. Well, let's start off with a couple of basic details. You know, we have a disclosure that comes in on the SUV market share for both, you know, from Maruti as well as for you all for the SUV segment. And we wanted your clarification out here with regard to that, because it appears one is talking about volumes and one is talking about revenues. So tell us, because as of now, the details that we have is it appears that Maruti has gone a little bit, that there is some movement on that front. Please go ahead, sir.
Yeah, so clearly, firstly, we are very happy with the Q1 results and the momentum that we see on the SUV business. We have over 280,000 open bookings still, even as we ramp up. So, over the month of September and October, we've crossed a volume of 42,000 in each of the months. So we've seen a very strong ramp up over the last few months. To your specific question on SUV market share, because our products are at an average price point higher than most of our competitors, we thought one of the ways in which we better represent our performance is revenue market share, because our average price points are significantly higher than those of our competitors. Given that, hence we've started reporting revenue market share, and that is the number that you see for us. Yes, in the current quarter, Maruti, the competitor you're talking about, has inched ahead of us. There's a minor difference on revenue market share. We are hoping by Q3, which is starting October, we would be able to recoup that as well. The gap on volume market share is, is a different story because it's a different product portfolio, and hence we would like to keep our primary metric of measurement revenue market share. And that, as I mentioned to you, is a very small gap between the two players in Q2.
Okay. Mr. Jejurkar, hi, good afternoon. Prashant here, and again, season's greetings. Is that the race to track now? The SUV market share race between Maruti and M&M, as you put it? You would try to, of course, come out on top. But what would it entail? Because that is the segment which is growing very well. The lower end is not doing well. The SUV segment is where most of the growth is. And pricing power, etc., has been. But as competitive intensity in that segment picks up, not just from Maruti but others, what would you have to do to stay on top?
Yeah, so firstly, Prashant, of late, the SUV as a percentage of passenger vehicles has now crossed 60%. It's been above 50% for a while, but has now crossed 60%. So actually, SUVs, like you said, is now a significant part of the passenger vehicle market. If that, be that as it may, we would, of course, expect competitive intensity, and there is competitive intensity with every player having a strong SUV strategy in the automotive business in India. We, believe our performance is very strong, given that we are selling 42,000 plus vehicles, and we still, in spite of that, have an open booking of 280,000. So it's really a question of, as we said, how do we continue our ramp up? We had shared our capacity expansion plan, where we had said that we would, by the end of the financial year, get to about 49,000 SUVs. We are currently halfway there. We are at about 42,000 a month by way of production. But we can still move up, and we still have a large open booking and a very strong momentum on our brands. So really, we believe our strength is our differentiation, our authentic SUV strategy. Our products are selling at very good price points. The average price of an XUV 700 is about 24 lakhs, because 70-80% of the demand is for the highest two versions. So we believe that we will continue this momentum, given that our brands have hit a strong sweet spot. There may be months or quarters when someone is, a little ahead or not. That's part of a competitive scenario.
Okay. Mr. Jejurkar, hi, good afternoon, and wish you a very happy Dhanteras, happy Diwali. This is Surbhi. Before we talk about tractors, which anyway has been sluggish for the last several months, just to complete the picture on the auto segment, I believe realizations have been a little lower than at least some of the estimates on the street. So can you give us a sense in terms of what's happening with pricing? Is there price elasticity, or now that the competitive intensity is increasing in the market, that could no longer be perhaps a lever?
No, we have been taking price increases, Surabhi, pretty aggressively. We, just as a context, we moved to BS 6.2 a few months back. We passed that cost on as well. So, when you look at average realization, it's also going to be a function of what is the model mix. And within products, what is the product mix? So, different analysts would have a different set of estimation on what of our products are selling. But we are on track with our revenue realization. And as you can see, our margins for auto standalone, which we put out, have actually now got back to F19 level. And if I was to put that by way of context, we've seen 3 years of rapid inflation where material cost has gone up significantly. We've now passed on all the material cost. However, as you understand, when you look at percentage margins, unless you are able to pass on more than material cost, that means you pass on the margin as well, your percentage margin is going to come down. So we've basically managed to now cross our F19 margin, which really, for most analysts was the benchmark margin. And we've done that by really rationalizing the rest of our cost structure. So for us, the revenues are in line with what we would have expected. Analysts may have a different version of model mix because a lot of the revenue calculation will be based on projected model mixes.
No, but in terms of just, a projection, I got that, Mr. Jejurikar, in terms of this quarter. But as you talk about the outlook, again, going back to that point of heightened competition, particularly in the SUV segment, will the elbow room diminish in terms of taking any further pricing actions?
Our products, as you know, Surabhi, are very different than those of our competitors. So we may be playing in the same space, but we play very differently. We play with a product portfolio which is far more authentic core SUV. That's the basis of our differentiation. And we don't necessarily have to compare our price points with some of our competitors because the products are very different and our customers buy us for completely different reasons than what they may be buying some of our competitors for. So, it's not a head-to-head comparison on pricing when we look at it. When we look at pricing, what we look at is what do we need to do to keep our brands aspirational, but yet accessible to customers. And that's the sweet spot that we try to navigate and balance. We don't look as much as at competitor pricing as much as what we think is the right price for our customers.
All right, Rajesh, I wanted to ask you about the tractor segment. I think earlier this year when we were talking about single-digit growth for the industry. Now, is there a change out there? Are you expecting a flattish number for the year?
Yeah, so we had said low single digits, if you recall,
yes,
through the course of this year. And we had said that for 2-3 reasons as we started the year. One was last year was a very high base, 950 or 1,000 of industry is a very large base. We had seen significant growth over the last 2-3 years. The second factor we had said, and as odd as it may sound, is last year we had seen 2 Navratras. So there was a second Navratra, as we call it, especially in the north, which was in the month of March. So a lot of when the Navratra happens in April, then you are going to see a momentum in that financial year. But this time that got preponed to March, so it went into the growth of last year. So that inflated the base of last year by about 25,000 industry size, right? So when we went into the year, we went in with this knowledge that, the industry is going to has seen a preponement because of Navratra from April to March. And that is going to affect the industry size this year, which is why we've kind of keeping these 2 factors in mind, kind of said that let's go in with a view of low single digits. During the course of this year, of course, we've seen, not a very good dispersion of monsoons. While the overall LPAs are not that off normal, the southern states in particular haven't got the right intensity and the right dispersion of rainfall, which is, implying that some of the states like in South and Maharashtra are slower than what we would expect. And which is why, we're at the moment making a adjustment, which is not a lot, which is from low single digits to flattish.
Mr. Jejurikar, just to go back to the overall picture, and you mentioned margins on the automotive segment. They've gone back to F19, but I guess on the street it's always ye dil mange more, right? So at a blended level, you're at about 12%, if I have the numbers right. What is the outlook, putting everything together in terms of margins for FY24, then getting into the next year?
Yeah, so when you say blended, you mean auto and farm together, right? That's probably what you mean.
Yes.
Yeah, so when you look at blended margins, you have to realize that that's a mix of the margin profile of auto and FES being very different. So if the share of auto in the overall revenue goes up, the blended margin is going to be lower, obviously, because there's a different weighting of the revenues. So that's what you start seeing. So, we would advise you not to look at blended margin because it doesn't really give you a picture of the nature of the business. You see the auto margin separately, you see the FES margin separately. They will tell you a much better story than doing a blended, because a blend is a function of if auto is going very rapidly like it is at the moment, and the average margin in auto is whatever, let's say 7.9, and the average margin in core tractors is 17.5, then obviously you're going to see an impact on the blended margin.
So let's talk
really,
segment. Let's give an outlook
to look at it.
Sure, sir. So just quickly, I mean, an outlook segment-wise, then that would help.
Yeah, firstly, we don't give outlooks on margin, you know that. So, we're not going to be able to give you a guidance on margins. What we always advise, anyone who looks at us as a company, investors and otherwise, we have a track record of what we've been able to deliver. We had said that we would improve auto margins over a medium term by over 300 basis points. We delivered that way ahead of time. There were questions on when will you get back to F19. We are back. We've crossed F19. So I think look at our track record and make a projection. Likewise, on the tractor side, we put out a slide a little while back when we did the media on what we call stability and volatility. So even as the industry over several quarters may move up or down, we've managed to keep our tractor margins within a 2% variation band. That's a track record that we bring to the table. So we will obviously not give you a projected margin, but I think we have the track record to be able to deliver margins ahead of expectations because of the way we run and manage our business.
Okay, Mr. Jejurikar, thank you very much for joining us. It's a pleasure having you with us here, sir, and good getting that. I mean, numbers have been looking
again,
good
happy festivals to all of you.
Yeah, and Rajesh, just wanted to tell you that over the last 12 months or so, we get numerous calls saying, my waiting period is very, very long. Can you get the car a little sooner? We are as helpless as you. But good to see the kind of demand for your units. And as you said, you're increasing capacity as well. So wish you and your team all the best. And hopefully, you'll start doling out more number of cars.
I hope that answers the market, the competitive intensity and market share question.
Absolutely. There is so get in line, right? I mean, that's all I can do. Thank you very much, Rajesh. Appreciate it. Thank you. Well, so that's Mahindra & Mahindra and the conversation on the tractor and the automotive side of things. Let's talk insurance now. Sources tell CNBC-TV18 that the insurance regulator, IRDAI, has formed a task force to suggest a framework post the denotification of tariffs, which means that premiums in certain general insurance categories will not be decided by the regulator or the government. This could potentially be pretty big for companies like ICICI Lombard, New India. These are the two big ones on the general side which are listed. Yash is here with details. Yash.
Well, Prashant, as you rightly spoke about, there are certain segments in the general insurance industry where the premiums are not decided by individual general insurance companies, but they're either decided by the regulator or the Ministry of Road Transport, so on and so forth. What has happened is quite significant in that context. The insurance regulator has formed a task force to suggest a framework post denotification and de-tarification of tariffs. What that means is essentially giving the power to price the premium back to these individual insurance companies and taking it away from the concerned authority which does it right now. That could be the ministry or the regulator. What this will do is that the regulators ask them to form a regulatory framework which will sort of direct the framework in the manner which these insurance companies will be allowed to increase the premium. Could it be on motor, third party, fire, engineering? And this is exactly what we've been given to understand from our sources as well, that this particular task force is expected to consider motor, third party, fire as well as engineering when it comes to de-tariffication or giving the power of pricing premium back to these general insurance companies. This is quite significant, and I'll give you just some numbers which sort of tells you how big this is. Motor third party segment itself is 12% of the general insurance industry premium, 40% of motor insurance premium. Fire segment is about 10% of the premium, and engineering is about 2%. Look at how these listed companies are placed amongst these three segments. ICICI Lombard has a 9% market share in motor third party, 13% in fire, and 15% in engineering. Overall, for ICICI Lombard, with this task force and the changes which are expected, a portfolio of 10% gets impacted. New India finally has 12% market share in motor, 18% in fire, and 15% in engineering. Overall, put these three together, these three portfolios, and 14% of the segment for New India gets impacted. So quite significant, not just for the two listed companies, but for the entire industry as well.
Okay, well, yes, thanks very much for that. Look at the market. There is a bit of a bump which has come. 30 points or so on the Nifty is where we are at. And this is looking quite good. I mean, I think we are at the high point of the day. Yep, we are. For the index as we approach the last 14 odd minutes of trade. Take a look at the Nifty Bank as well. Yep, we are at the high point here as well. And the gain is about 1/3%. That's 130 odd points coming through. Let's just see broader markets there. Also, by the way, we're not at the day's high, but there's a 0.4% gain on the Nifty small cap index. And you got the mid cap index, which is looking up about 0.5%. Mid cap index is clearly shot up. There you go. Not the small cap, the mid cap index has shot up, and we're at the high point of the day here as well. 0.5% gain on the small cap index. Market breadth is not, I mean, the 100 stocks separating gainers and losers, but more gainers than losers now towards the fag end of the day. We'll take a quick commercial break here. More market talk on the other side. Stay with us.
Welcome back. Here with us in Closing Bell, and we are in the last leg now, just about 10 minutes, under 10 minutes to go before the day, the Dhanteras trade closes out. Sudeep Bandyopadhyay is our next guest on the show. Sudeep, season's greetings. Wish you a very happy Dhanteras, happy Diwali to you and your family and your team as well. So tell us, it's been an interesting ride and a lot of consolidation. Give us an idea of something that you've liked that you think you can take on with you in the new Samvat as well, in terms of a stock idea.
Well, Subi, happy Dhanteras and happy Diwali to you and the entire CNBC team. I think the theme which we had picked up during the current Samvat will continue into the next Samvat as well. I think that is domestic focused construction, infra, and building related stocks. And this is one sector which I think will continue for the next 12 to 18 months. There is a tremendous tailwind behind this sector, and start with the big guy Larsen and Toubro. I think that's a fantastic stock even at current levels. Apart from domestic business, they are getting huge amount of business from Saudi Arabia, and already more than 1/3 of the order book is international. And remember, the old legacy contracts are running out, so the margin profile will significantly improve as we move from Q3 and Q4 onwards. So overall, I think that's a great stock to buy and hold from a long-term investor's point of view. Apart from this, I think we are a strong believer in the India consumption theme as well. And what better to look at than the gold on a Dhanteras day. So if I'm looking at gold on a Dhanteras day, I think of course Titan. We love Titan and we have Titan and we keep recommending that. But beyond Titan, I think one can definitely look at Kalyan Jewellers. I think the margin profile is improving, and the return on capital employed will significantly improve going forward as they move more and more into northern markets, which is high margin market. Also, their franchise model, which they are adopting for this expansion, both in India as well as in West Asia, should improve the return on capital employed significantly. So, considering the performance and the delivery, I think we can look at Kalyan Jewellers as well from a Dhanteras consumption theme by today.
Okay, all right, got that. Hi, Sudeep. Good to see you in as always, and happy Dhanteras to you. Well, the stock of today actually has been Honasa, Mamaearth. The stock was down more than 10%. Everyone was talking about Mamaearth coming back down to earth. Well, the stock has taken off. Now I think it's up close to around 20% from the low point of the day. What's your view? Are you in the camp that says that this growth is going to take off, advertising costs are going to come down, and it will find its value? Or do you think that, no, it's too expensive, you rather stay away?
Happy Dhanteras and Diwali to you, Nigel. I think, I will probably stay away from this excitement. I know the Jeffries report has come and they are talking about $520 valuation and things like that. But I think to me, it looks a little far-fetched. Sorry for being a little, straightforward here. But there is tremendous competition. We haven't seen this company yet perform and deliver on the non-Mamaearth brands. Also the offline sales has to pick up, online has to keep pace. A whole lot of factors which have to, absolutely on a pink of health to ensure that kind of valuation which Jeffries is talking about. I think market is excited, a lot of people are excited, but I would probably be cautious here. And we'll wait and watch. Let's couple of quarters go. Maybe we'll miss a part of the rally, but doesn't matter. I think it will be premature to jump into the counter now.
Okay, all right, got that. That's a word on Honasa. Just some more stocks that are kind of catching the attention right now. PFC has had good follow-through buying today, by the way, about 4% up on this one. Looking good in Jio Financial Services. That's actually moved up on not just the price, but on the volume charts as well. 3.5% up on Jio Financial Services. Your thoughts on some of these PSUs, Sudeep? PSUs have had this fantastic run. They've been the best performing stars of the Samvat that's closing out. But the question is, are any of these PSU stocks, defense, power, are they good for more? Would you look at any fresh purchases?
Well, Surbhi, I think defense has done a fantastic job, so has power. If I have to look at PSU stocks, I will definitely look at PSU banks, PSBs rather. I think, let's say Punjab National Bank or a Bank of Baroda, even at current level, do definitely look good. I think they are still trading at a significant discount to their, book. And, the market assumes that they will continue making the same blunders which they did 10, 15, 20 years back. Hopefully they will not. And they will do the right things with a strong credit growth, asset quality continuously improving. I think they have a long way to go from here on as well. SBI also is good at current levels. But if I have to really pick up amongst the PSU banks today, I think I will look at PNB and Bank of Baroda. I think those stocks can be picked up at current level for 1 year kind of a hold.
All right, got that. Sudeep, well, we'll have to leave it on that note. Thank you very much for joining in today. A slightly short chat, but we wish you a very, very happy Diwali. May you have a fantastic, of course, Diwali break. And we'll see you with the markets again in the next couple of days. Thank you. Okay, with that, we're coming down to final trades and the final moments of this Dhanteras session. And guess what? It has turned out to be optimistic and positive after all. The bulls will really want to take this with both hands. We really fought against all odds. The market had very negative global cues to start off with, thanks to the commentary that we got in from Fed Chairman Jerome Powell. All of the Asian markets have been down and ugly, I mean, compared to us, that is. If you, in fact, just as a contrast, we'll just talk about that. Some of the markets like Hong Kong, etc., down over 1.5%. But the bulls have fought through. It's the festive spirit that's really prevailed in the Nifty, closing in style at the highest point of the day, 53 points higher. So let's talk about the winners then, the stocks that took it higher. Actually, a couple of PSU names had a good run. NTPC is up 2%, the biggest winner on the Nifty today. There's ONGC keeping it company, about 1.5% up higher there as well. Banks actually came back with a bang, and that explains the kind of turnaround that we've seen in the market in the last half an hour or so. Big moves over there. Look at Axis Bank, HDFC Bank, quite a few of these frontline names. Kotak Mahindra Bank looking at green as well. ICICI Bank managing about a 0.5% increase for itself. Even State Bank of India, some gains for SBI too. So banking looking good. Then you have some of the other index heavies like ITC, which managed to turn around quite well. 0.5% up on this one. Bajaj Finance has had a decent session for itself as well. Almost a 1% gain on Bajaj Finance, and some follow-through buying on a couple of pharma names like Sun Pharma. That one was up. Sun Pharma and Cipla, actually. Both of those pharma stocks up and about. What didn't work today was really auto. In terms of sectoral moves, that's something that stood out. Hero Motors down about 2%, M&M struggling down by about 1.5% as well. And then you have the IT names, TCS, Wipro, Infosys. IT was a weak pocket. So auto and IT weak, but banks decided to play ball towards the end. And the net result is a pretty good close for the Nifty. The mid-caps doing even better, 0.5% up on the mid-cap index, and the highs over there as well. We are going home with a very positive advance decline ratio, almost 1,600 stocks advancing, 1,400 declining. So that picture also turned around quite nicely in the afternoon session. Talk about some of the big movers and shakers. Then, as I was just saying, PSUs in general have had a good run today. So PFC, NMDC, REC, BHEL, these are the stocks that stood tall. Railtel, so railways, defense, PSU metal stocks across the board. A good day for them. Ashok Leyland managed about 1.5%. On the gainers side, Anthony Waste, after numbers, that stock was up about 13%. You have lots of movers on the small cap and mid cap screen as well. Look at something like a KPI Green up about 10%. So decent day for a lot of mid caps on the upside as well. KPI IT Technologies about 3.5% on the higher side. On the losers list, you have some result reactions playing out. Senco is one. Z, with the whole confusion about what's happening with Mr. Puneet Goenka, whether he'll continue or not in the merged entity, 5% down on Z. And United Spirits was the other one, which was down about 4.5% on the back of earnings. Well, that brings us to the end of this week and this session. Positive close for the market. Once again, a very, very happy Dhanteras and a very happy Diwali to all of our viewers from the entire CNBC TV team. We will, of course, take a break right now. It's a wrap on Closing Bell, but keep it with us. There's lots more coming up on the other side.